on, everyone? This is Jordan with Conquer Trading and Investing. I hope you're doing well and great on this Friday morning as we get ready over here to put in an old school CTM live session, getting ready and ahead of today's market event, Jay Powell's speech at 10 a.m. out of Jackson Hole. And if you're looking here at the index, Fabio, great morning. Dave, happy Friday, bringing it in. Hope everyone is having a really, really good week. I hope that you've done something this week that is setting up a better and a brighter future. And I hope that today you're going to go ahead and continue to build on the momentum that you have. Right? Looking here at the NASDAQ this morning, what we are seeing is exactly what our expectations were. You remember, this is on Monday, Tuesday, and us talking about how coming into Jackson Hole, we just expected the market to hold support over here and be hanging out somewhere in no man's land. And that's exactly where we are. We've gone from this massive move in June, which kept extending. And after being sold off, quickly became oversold and is now kind of neutral. Going into today's event, I think it's a coin flip. There's lots of discussion about whether Powell is going to be hawkish, whether or not this is actually setting the stage for a dovish pivot, or how the market is positioned. I feel like it's kind of neutral. I really genuinely feel that market positioning is not overly hawkish, judging from different types of articles and headlines and newsletters and just putting that all together. I don't see everyone leaning one way. And I think that might even open up the door for a market reaction that is not that intense. We'll find out. We will see. And by the way, it could carry forward to next week. Speaking of next week, there's a couple of things that are important on the calendar, including at the end of the week, non-farm payroll. Rest assured, people will be looking for clues on Wednesday to what Friday's number is going to be. And we do have manufacturing PMI numbers on Thursday, which is important because whether or not the Fed is tightening into a slowing economy or let's call it a strong economy, one strong enough that they feel is able to withstand this type of tightening, means everything. So we got a strong calendar next week. And then after that, we do have, again, in this new data-dependent area we're in, that's where I think Powell is going to be trying to go with this. We have ECB press conference the following week. And then after that on, is it the 12th? The 14th, CPI. No, that's PPI. Where's my CPI at? CPI on Tuesday, September 13th. Put that on your calendars. That is going to be a big one. But I think expectations, and I think the market has now caught up. There's a difference between doing this stuff in real time. Big shout out CTM over here at the end of June when the market fear was just like at its peak. We were talking about following specifically food-related commodity prices, energy commodity prices, why we expected the next couple of CPIs to come in soft. So far, we have one, right? That was this past month's at 8.5%. I expect the next one also to come in lower than 8.5%. We will see whether that's correct or not, but I think that the market has more or less begun to price that in as well. A couple of things that I want to start off this session with, and that is over here. Some of you may be familiar with Bridgewater Associates, the largest hedge fund in the world. This is Ray Dalio's outfit. And what they're saying is that, listen, you are not going to be able to avoid the pain. Now, many people read the headlines. This came out across yesterday. It's not just here on the Zero Hedge. This was a Bloomberg article. And you can see August 25th, yesterday. I just want to add a couple of thoughts about this. Part of the process of what we do is just learning to look at things different, And, what he's saying here, there seems to be it makes a lot of sense. The Fed, they're looking to tighten, and that markets are not going to react well. Get ready for some pain. We could see another 25% down in stocks, 25% on Fed's QT. And all of that seems to be reasonable and true, right? By the way, did you know that they also put out this on June the 9th? At June the 9th, they put out a similar policy, a similar press release talking to all the media outlets. That was right before the markets went on a substantial rally, not crashing 25 cents. How much was the NASDAQ up since the lows over here? I think it's as interesting. Ever since their article was on the 9th, the article wasn't on the 16th, right? So you got here on the 9th. Okay, that's not so bad. 11%. And then how much did they crash? Right? Not 10%. All right, we'll call that neutral. They didn't get the bottom by any means, shape, or form. I mean, they didn't call the crash or send out the press releases to talk their book at the bottom. Market was kind of neutral ever since they sent out that release. But what is interesting, if you're familiar with Bridgewater, that you might be familiar from the meme, cash is trash. Ray Dalio, cash is trash. What has the dollar done ever since that famous meme, cash is trash? Has the dollar acted like it's been trash? Obviously, everyone is very familiar with the DXY's performance, where you don't even have to measure it that. You could go back and just look at Bitcoin itself. And around the time they're telling you cash is trash, if you would have gotten into cash, you would have been obviously outperforming everything out there except for oil. Except for oil, you'd be outperforming. And actually, oil is not even back yet close to where it was when that particular meme was sent out. What's the other thing that Bridgewater is famous for? Talking their book about China, the best investment, the greatest investment, the best investment, as their tech sector has come off and been absolutely obliterated, as the real estate market over there is in crisis, and as what else is going on over there? The yuan continues to be devalued. So I'm not so sure that I want to listen to Bridgewater, probably because they are the world's largest hedge fund, and probably because they are talking their book. It would be different if every once in a while they got something right. But it seems that they do have a habit of actually being on the wrong side. And that's just some thoughts over there about whether or not or how closely you should follow headlines and ideas and thoughts from different funds and investment banks, So, boom, boom, in the room. Let's get going over here. CTM, panel, Ethereum, Bitcoin, Cardano, Ethereum. And then this was beautiful. This was posted in the Discord by Fire. This is taking yesterday's live session and then making a resource, which is going over and being able to subtitle everything talked about during the session with timestamps, and then putting in the resources discussed, at what point they're discussed, whether it's not it's the playlist for understanding CTM 2.0 for the new members, the Almanac Guide with all the course material, the ability to trade off 3 commas using the mother of all templates. This is the mother of all templates. Big shout out to Andrew. Big shout out to Zuzu. Big shout out to Reza and everyone else, every single dev who's contributed. Clarifying stop loss at 640. This is an enormous gift. Thank you, Fire, for going ahead, and then including also other images that were shared throughout the session. I am going to take this moment here as a true friend. I cannot tell you of a better resource than the program that I offer. If you are interested at truly conquering the markets, working with myself and my team, I think, is the absolute best gift that there is out there in order to get you to not only reach, but exceed any goal that you ever had for yourself when you started out in the financial markets. What we do is an absolute gem. It is beyond that good. I really mean that from the heart, and I really, really welcome you to it if you're interested in it. This is our current positioning, right? Short still on Bitcoin, right? And you can see that nothing has changed as far as price continues moving in this bear flag now towards the top of the range, getting ahead of I have to tell you, I expect this trade to end up in a loss. But then again, I have to tell you a couple of other things. I'm completely detached. I don't even care. That's the truth. The second thing is that the odds are, I mean, the truth is, if all of a sudden the market's reaction is unfavorable, holding a trade that's already 7-8% into profit at the top of this bear flag is just really set up. It's a position of power. It's a position of power coming into a high risk news event, knowing that you're holding open PNL that's in profit. And if you're not, like, this is as true can be. If you're holding a position right now and it's not in your favor, and you're like hoping that for whatever reason the market reaction is going to help you out, that's a bad place to be in. That means that you are just absolutely out there trading off the cuff and guessing. I do not want that for you. I'd rather that you're not trading at all. I'd rather that you focus here every day on these public live streams and learn to paper trade until you are successful. And I do believe that you will be able to do that. Just stick with it. And capital is precious. And once you begin to understand that you don't need to pay for a market education through losses, because you actually have the ability to pay. Jordan, paper trading takes out all of the emotions of trading, and it's completely different than when you're trading a live account, for sure. But if you can't profit on a paper trade, you think you're going to be able to handle the emotions and psychological aspects of trading on a live account and putting money behind it? I don't think so. I think you're going to lose money, and then you're going to chalk it up to market education. And I think that you're better than that, and you could do better than that. You could see over here that from this rough sketch of this sharp on Ethereum, the sharp ascending wedge, it is broken down and now kind of back up to neutral over here. Whether or not they were trying to catch some people, whether or not they were trying to pick up some liquidity on the short side over here this morning, I don't know. I mean, obviously, I don't know. This trade is not. This trade's only about 2.5% into profit. Not so on the downside. You're seeing Ethereum. You're seeing Bitcoin leading on the downside, and that also makes sense here because on the upside, we were seeing like Bitcoin. It was more subdued. It was in a rising channel with a slight slope to the upside in a very tight range. And on the upside, the Ethereum, the Ether, right? This thing was running also in a channel, but much steeper, much wider. We were not small gains and losses over here. Nothing of note. Over here, big gain made on the upside. And now here on the downside, it's the opposite. You're seeing Bitcoin actually showing more weakness over here than Ethereum. Bitcoin is actually dumping harder, and Ethereum is actually holding on to better gains. So is that a read of the market showing that the market is actually a little bit more geared toward risk on? I think so. I think that's showing that the market here has a little bit of a risk on bid to it. Now, everyone, by the end of the day, all of their assumptions most likely are wrong. I'm going into the event like I have no idea what's going to happen. I gave my thoughts that I think that Powell is going to try his best to come off completely data dependent. He wants the market guessing. The best thing for the Fed right now, I believe, is not to get any participants front running too far one way or the other. We'll see whether or not that's what he wants to do. I think that it's signal if he comes out and he's very clear and very adamant that inflation remains a big threat, the biggest threat out there, and that they want to go ahead and continue to raise rates. Not that they can't or don't have the room. I was very clear about it the whole way. When the Fed said that they believe that the economy is such that they believe it could withstand the tightening, I believed that there was an abundance of liquidity out there, and that was the truth. Now, we will see if that winds up being correct or not. But I think that it could even withstand more tightening at this point. We have Luke, a.k.a. Lucasis, really doing a good job over the past months now, putting out some good work, showing us the credit markets and when they are, let's say, towards a critical point where that is what the Fed is paying attention to. They're not paying attention at all to the price of the NASDAQ and S&P 500. Entering ghost mode here as I talk. Hold on 1 second. And then just let me make sure that I'm good to go. All right. So there we are. So like, listen, I personally didn't feel this morning that there was a reason ahead of I think everyone's prepared. If you didn't see yesterday's session on the channel, it was a really tremendous macro session. I highly recommend that you watch that. If you didn't see Wednesday session, it was a very, very good technical session as far as trading. Lots of lessons to be learned. I highly recommend you watch that one, depending if you're more technically inclined or if you're more macro inclined. And those are really two good ones. Coming into today's, I was like, well, we're kind of waiting here on Powell, and there's not much to say, do, or add. But you know what? I wanted to get up early and make sure that I'm here with all of you just to make that commitment to all of you. And I'm the type of person, when I make a commitment, I hold to it, and I hold it to it strong. I think like over the last years, there was one live stream I missed, and there was two. The first one was no, I didn't miss it. When I actually was sick with the COVID, you know, I remember out here pushing out a fire session, running a high fever. The only time I missed the session, my brother, he called me up and he's like, "Listen, we're having a hard time with the kids. Could you come up here? Let's take them out. Let's take them out into the mountains." And it was one Friday, and that was the only time I missed the session. You know, that's the type of dedication it takes if you want to be successful in the markets. You got to put the work in each and every day, and you got to be dedicated. People talk about, hey, my goal is I want to be able to quit my job so I could trade full time. Great. That's a great goal, but be prepared. You're going to work harder than you ever worked before. That's what it is. All right. So what else are we looking at here today? Oil selling off. When I say selling off, I'm talking about some pretty fine work we did over here, not just over here. You could go back onto the Twitter. You could go, there's a link in the description below. You could go also to the YouTube channel. At this point, the video is The Macro Can Change Rapidly. We were able here in June to get this sell impulse in oil and then continue doing our best to monitor this all the way down, including when we had this trend line break, saying, you know what, we're not going to buy into that. We're going to wait over here. We put in this line of resistance. Look at that price. It's exactly where it held. And that over there is keeping us still further in the trade. I know over here, this was on the Saudis talking about OPEC is going to be cutting supply. They're not really happy about the Europeans and Americans talking to the Iranians, and they're therefore going to step in and do something. But here, I mean, it is what it is. A break above this level over here, right? You could say this is a breakout. And right now, after the breakout, we're coming in for a retest. I buy that 100%. It's protecting you in this instance. By the way, usually breakouts, right? Not waiting for the retest and resumption. That's something we do on crypto, and we do in a bull market. If you don't do that in crypto, these things will get away from you and fast and furious. Now, in every other market, it's normally that you're looking for breakdown, retest, and resumption up. Over here at this point in oil, I'm waiting for a break above this resistance, this $95.50. Oil gets above it, and then you're looking for it. Great podcast I listened to yesterday. I don't have it pulled up here for you, but one that I highly recommend was Luke Gromen on the Margin. If you have the opportunity right now and you're able to pull that up, make a note of it on the browser. I think that's a conversation that you would really like to listen to. That was Luke Gromen on the Margin podcast. Craig, great to see you over here. Oh, thank you, Dave. No, with all the great thank you very much for even saying that. I appreciate that very much. Thank you for building me up there. And yo, what's going on, everyone? Good day, Kyle. Great to see you over here. Boom. Juan, what's going on, my brother? I hope you're well and doing great. I saw your message late last night. I'll get on that here today. What else we're looking at? We're on hold, right? DXY coming on. nothing to me right now is signal, right? Right now, I'm just kind of waiting on the market's reaction today. I just really wanted to show up and make my presence known to you, knowing that there wouldn't be too much to add to the conversation today on this Friday. By the way, right? Usually on a Friday, you're not looking to take new positions, especially like, I mean, Friday, taking a new position, want to hold a new open position going into the weekend. Not something that's recommended at all. Now, that's not to say, and I won't. I could look over here. Thank goodness for crypto trading 24 hours a day, 7 days a week, right? If all of a sudden the market reaction is very favorable, and if we get a massive candle to the upside, and if I get stopped out of my trade, it is quite possible that a new buy signal, because right now we've been in this area here where we've been flipping back and forth, right? Even though we don't have a clear trend in place. We did for a while on the downside. For a long while, there was a clear and strong trend going all the way from the beginning of April all the way down through the middle of June. And at this point, you're far away from a long signal. Over here, it was different, right? Catching that long, there was long trades over here and over here. And where we're at right now, though, we could flip back pretty quickly and make sure that, like, we don't have to make sure. Our positioning could flip back and forth pretty quickly right now. And I think that's appropriate for where the market is, because the market, it seems to me that it is potentially putting in, if I don't want to, you got to be very careful over here. From what I'm seeing over here, though, off of this, what I would see a potential capitulation event that occurred in June. A lot of forced selling took place. All of we've seen so far is the market come back right now and test that area of potential support being formed, right? And that happens in a lot of bottoms that we've seen. So it can make the case for sure that a bottom is being formed. At the same time, there's not one person I know of that would be even remotely surprised if all of a sudden and right and quickly, whether it's through today through the end of the month and surely into September, to see the bottom come out over here and a massive leg down made towards, let's call it $14,000 on Bitcoin. I think that's the general consensus. Now, there's for sure a lot of people who feel that this is the bottom, but it's true. Most of those people have felt that way the whole year. Like they've just felt every move down has been the potential bottom, right? Or when really strong areas of interest, technical breakdowns out of that channel coming off the peaks of April high to November high, cloning it, pushing it down. When 35,000 broke, right? They still were like, oh, well, we're going to make new all-time highs and things like that. I don't know how many people at this point said that this could be capitulation. I don't know. At this capitulation, this is the Luna capitulation, we're like, all right, it's time to return to dollar cost averaging, right? And I think that's really smart. Now, we don't know how much longer or how much lower price is going to go, but coming off of January, the posture was, no more dollar cost averaging, build reserves. Do not dollar cost average into Bitcoin if you've been. Make sure that you look to build up reserves if you're able to. And then at this point, okay, now return to dollar cost averaging. It doesn't matter how much lower or longer. It seems like this is a high value place to go ahead and build a position. This is a place that you could actually walk over to your neighbor, and your neighbor who's been asking you, is it a good time to buy Bitcoin? For, even when Bitcoin came off 50% from the all-time high, and you're like, ugh, I don't know. I wouldn't buy here. The macro looks pretty ugly. You never know what's going to happen. At this point, though, you could feel comfortable about telling your neighbor, you know what? I don't know if it's going to go lower or even for how much longer, but I feel like this is an opportune time to go ahead and start, setting up some type of monthly or weekly purchase to dollar cost average in,
And then they're going to be like, what, you can't tell me this is the bottom? They know that. They as long as you're very straight with people and getting them to understand the risk from the very beginning, they know that you don't have any type of crystal ball whatsoever, and then you're setting them up much better in a position of strength. So these are the thoughts that we're discussing this morning, and we have a bit of right. So Robert, that's a great question. We had some wonderful questions towards the end of yesterday's live stream, and I recommend the first 15 minutes where I was laying down some macro views that are a lot different from everything else that you've seen out there on the net. And then the last like 15 minutes or so, coming off a lot of great questions. I think that part offers a lot of value as well. So, Robert's wondering if they could come off. Could a dovish Powell mean they're begging for the fall of a dollar? So the dollar over here, and again, we looked at in yesterday's session and the day before, I think, how the dollar is really like reflective of the weak euro and also the weak Japanese yen right now. And for sure, the Japan and the EU are allies of the United States, and for sure, it's causing massive pain to both of them, which, energy's priced in dollars. So it's really terrible. Is it possible that the Fed wants a weak dollar as the wrecking ball over here is at 108, 109 wrecking ball prices? I don't know. I mean, on one hand, it seems that the only way that they could bring down inflation is truly by slowing down the economy, moving it towards a recession, and arguably, or if you want to argue that we're already in a recession, I mean, even if so, it's which I don't think so, because I think there are a lot of factors for sure. That seems to become a political topic. I'm pretty sure everyone knows my political stance. I don't support anyone, right? And I think that I support the people. That's for sure. By the way, be careful who you support. Warp Speed, who supports you? You know. Anyway, what I think is happening over here is that I think at any time, if they want to weaken the dollar, the way that they will weaken the dollar is actually going to be printing dollars to buy euros and help defend the yield curve over in Italy or the EU, and or the same thing, print dollars and buy yen to go ahead and defend the yield curve over in Japan. I think that's the way that they would look at weakening the dollar. And if that's happening, I think that we'll be able to take note of that, because the balance sheet will be, I mean, a lot of people, first of all, I have to say it again only because it's ridiculous. Like October, the Fed is very clear they're going to taper. And that tapering is going to really be finished by March. And then people see the balance sheet growing. Oh, the Fed's not tapering. Okay. And then by March, sure enough, they finished that flatlined. Yep, they're really tapering. And then they'll QT starting in over here and now, and it began in June. And well, they're not doing QT. The balance sheet's rising, like over here as price went up. If you go back and you look at the last time QT was running, right, you could see over here that that wasn't straight down either. Here you go up and up. Yeah, sorry, that QT is not running over there. Over here, you got QT running and then balance sheet up that doesn't mean that they reverse their balance sheet. That's normal ebbs and flows. That's where we're at today. It's supposed to pick up next month, and through November is when you should see a noticeable difference in QT. If we start seeing at any point in time why QT is running, that the balance sheet begins rising, that would be an indication that perhaps some type of stealth yield that would be an indication that perhaps some type of stealth foreign yield control curve is underway. I think that's how they would look to go ahead and weaken the dollar if need be. Now that seems like a conspiracy theory, and maybe it is. Well, it would be people conspiring together if that happened. but it is a theory right now. That's not any type of like fact. That's only a potential theory. Right, Luke. We looked at that yesterday. Right over here. This was Peter, Game of Trades, pointing out over here. If you could see it, this is all I have to pull it up for you. What is this? I didn't even see this part. Ooh, tasty. Fire stuff. Fire stuff. This over here from Peter is showing on the DXY. No, that's not the DX. This is the DXY down over here. And you could see as that double top, and double top is obviously not a high percentage chart pattern. It could happen, but most of the people out there just believing it's going to be the high. I would think that's probably on point. But you are seeing the divergence here occurring with the lower high on the RSI for that last move up. And by the way, even if you get this next sell impulse occurring, right? That doesn't mean that's the end of the dollar. That would just mean that this thing is potentially cooling off, potentially even moving back down towards this area of a conservative trend line. But the trend is still well into place. So we don't want to get caught up in the chop by any means. All right. What else? I think that's it. I think we have, what time is it right now? In New York, is it not in the 9 minutes or so? We should be seeing the Powell speech. So I kind of want to hang out and see live the market's reaction to it. I like doing that a lot. Let's see if we could do that with you. I have to say, I like to frame every single session ahead of time. And I wanted everyone to know, listen, there was not too much to add here on this Friday. I wanted to make sure that I'm here with you as far as commitment wise, but we're waiting on further. We're already, first of all, positioned. We already put in all the work. If you want to check out a technical based session, watch Wednesdays. And if you want to watch one that's macro related, watch yesterday's. And most of all, if you are just glad to be here regardless on this morning, please go ahead and tap with the algorithm, smash the like button, and show a little bit of love. I want to see if there's other questions over here. We can open this up into a true classic CTM live session on a Friday by just going, just talking about things as they pop up. When people say that paper trading takes emotions out of it, it tells me they aren't taking it serious enough. Learning to feel good on a losing trade that followed your strategy is powerful. Oh, I have to pick up the Canadian investor on that last portion over there. Learning to feel good on a losing trade. Like even better, if you are following a mechanical system and it's buying into resistance and you don't feel that you should do it, taking the signal, getting stopped out, and then feeling good about it, then you've arrived. Then you have arrived. You've been able to take the motion out of it. You've been able to take the trap of discretion out of it. But that's a great comment over there. When you feel good on a losing trade, that followed your strategy is powerful. Those right there show a lot of wisdom, a lot of experience, and that's what we look. If you don't talk about it, and someone out there is learning and someone out there is working hard, but you want to guide them. You want to get them on the right path so they could go ahead and hasten that time it's going to take them to turn the corner to profitability. That's a nugget right there. Yeah. So Mika, the website is a disaster. Actually, it's CTM who went ahead and actually they're like, Jordan, just keep doing what you do every day. I get that you're not like an administration guy. We'll organize all the course material and not the outline they've done. Like all the course material has been organized on the almanac by all of the people in the course, right? And I'm grateful for that. And same thing with the website. But whether it's tomorrow or whether it's next week, like legitimately the website will be changed, because the ability to get into working on Team with me in Discord is going to be changed a lot as well, because I'm really happy with the environment that we've created, that we've nurtured, and who I have working with me. So all of that is going to change, but all I could say is that it's all inclusive as it is right now, right? There's not you get access to everything, and when you sign up, you'll actually get a welcome email from me that's going to give you the Understanding CTM 2.0 playlist. It's 3 videos, roughly 3 hours long. By the time you finish that, you're going to be, let's say, 90% caught up, including having all the templates. It's just one click install. And then it also has that's in the description of the second video. In the description of the third video, you're going to find 2 other tutorials on also setting up automation. You don't want to do that until you fully understand the system, as well as the link to the Discord is in that welcome email. So regardless of what, don't it's all inclusive right now. That will change. So what else? John, great to be here with you. Yep, 300 billion, right? And that's one thing that's also, by the way, when we talk about or when I've mentioned that in the future we're going to be looking at what an eventual expansion of the balance sheet. Now I imagine that's as far away as possible. A lot of people like to talk about the Fed is going to tighten if something breaks, and then they're going to come in and pivot, and that pivot looks like cutting rates to 0 and restarting quantitative easing. There's a lot of time in between that all happening. And more often than not, in between that happening, you'll see equity markets make new all-time highs. Now, that depends on whether or not they're tightening into a slowing economy or they're tightening into a growing economy. And anyone over the last 2 quarters could make, and they're correct, they're tightening into a slowing economy. One caveat, what happens in the third quarter and fourth quarter. And I think that we're going to see positive GDP in both. And I don't think it's as easy as everyone makes it out to be. I think the timing in between is always a lot longer than people expect. But when they do eventually return to quantitative easing, things out there are going to be pretty dismal in the economy, I expect. I think there's going to be a lot more people out of work. I think a lot of people have going to lost a lot of unrealized paper gains that are inside their house. And I think there's going to be a whole lot less spending going on. And you're going to see the Fed come in and do what they do. But I think the government at that point, after what they just did during the last crisis, is going to be very apt very quickly to also, once again, be quick to hand out stimulus, or as I like to call it, bypassing the banks and going ahead and sending money into the accounts of the people. That's really inflationary. So what the point that we're in right now, or the point that we're in right now is we're like a really big monster wave just came in and is in the process of cresting. That was like at June, the high. And then we're seeing in July, it's just beginning to roll over, maybe a little bit more in August. And we don't know how far that wave will come in. Like, it could be the beginning of an intermediate like pull-in where actually you start seeing deflationary pressures prevalent. And even people talking about how deflationary forces are stronger and inflation really coming off pretty significantly over the next 6 to 9 months. That's possible. But we don't know if that's going to happen. We have to watch the prices of commodities specifically. And if we see them beginning to rise up and sharp, you saw how quickly the dollar just came out of that pullback, right? Here you had a little pullback on the dollar, and then it's boom, smash right back up. If you start seeing that happen on oil over here, and a few weeks from now, or in October or in November, oil's trading back at new all-time highs, then we are going to see, or what we're seeing is actually this massive peak that's rolling over. It just went like this, and it's coming back up. I mean, we got to be prepared for everything. It is possible that this wave comes in a lot harder and for a lot longer, and it might be up until actually sometime in 2023 when things are really nasty, 2024 when things actually break and it's the deflationary push. And then the Fed comes in expanding the balance sheet. Government comes in with stimulus. This wave over here, this peak is going to get taken out eventually. And I think we're going much higher. But again, it's the timing in between that we don't know. That's why when you see someone out there and they're telling you what's happening in 2023, they're either right or wrong. They either got lucky or they didn't. But you can't make that type of forecast in this type of environment. You can't go beyond 30, 60 days because it like truly we're data dependent. And I think that's the posture that we want to have here this morning with everyone. So, Simon, bear flag could play out. If that plays out, that's golden. Yeah, I mean, when I say it's golden, I mean only because we're positioned for it. So if we get this bear flag on Bitcoin over here, like crashing down, that's a position of power. Holding an open trade is right now in profit, a position of power. Same thing on Ethereum. If this comes out here, that could wind up being a beautiful thing. But I'm prepared mentally that even though the trade's in profit, it's not going to end up in profit. And especially after coming off such a big win, right? It's very rare to put back-to-back-to-back winning trades. I expect that, 2/3 of the trades put on are going to stop out. So expectation is just, well, you'll wind up not even caring. That's the truth. And that's like really what we see going on. A lot of the conversation is we just don't care. I've not like that. Let me try to find out really what's said over here. It was really articulated well last night. I was reading before going to bed, trying to find out. Boom, boom, boom. I completely divorce my CTM trading from any thoughts about the market, macro or otherwise. To me, I treat it as an emotionless and calculated machine that I oversee. It keeps me from making any subjective altercations. I don't root for any one trade. Just remember, it will hit good ones, about 1 out of 3 or 1 out of 4 sometimes on average. I stopped caring about the exact order, the exact trade, right? The exact order, just that it's executing properly with the best data. And that right there is conquering the markets. Beautiful stuff. Beautiful stuff indeed. So is Powell's speech on the way right now? Does anyone know? I'm watching the markets. I'm not really doing anything right now. There you go, Dave. Powell's on the mic right now. I was going to pull him up. All right. So just give me 1 second here. And if you don't mind, out of interest, I want to see what he's talking about. So I'm pulling up here on the tube. Powell, Jackson Hole. Let's see if we get a live feed over there. There we go. And I'm going to bring him in.
In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases.
I love this. This is the emoji right here.
Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting.
He sounds defeated. He sounds terrible. What's wrong with that guy?
Policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on three important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job.
Right, Silver Johnson?
The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time.
Oh,
Today,
okay.
by many measures, longer-term
I see what they're
inflation
saying.
expectations appear to remain well anchored. That is broadly true of surveys of households.
He's trying to tell you that it's not the central bank's fault that they went ahead and expanded their balance sheet by $7.1 trillion. It's the public's fault for having expectations that inflation's happening. Now, thank you, Powell.
It likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation
Leo,
is
thank you,
stable,
brother.
they are freer to
Thank you
focus
so much.
their attention elsewhere. Former Chairman Alan Greenspan put it this way: for all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done.
There he goes.
History shows that the employment costs of bringing down inflation are likely to increase with delay as high inflation becomes more entrenched in wage and price setting.
That's exactly what he just said right there.
Inflation of the early 1980s followed multiple failed attempts to lower inflation.
That's exactly what he just said.
15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done.
Market's really buying that. Right? Market's buying that. Powell just told us he's going to keep tightening.
Thank you, Chairman Powell. Our first session of the day is reassessing economic constraints, maximum employment. We will hear first from Nicola Fuchs.
Jokesters, banksters, going ahead and taking our money and redistributing it to the wealthy. And then they're talking about how they want to fight inequality. the greatest cause of inequality in the world is the central banking fractional reserve debt-based system. Bitcoin fixes this. Bitcoin is fair and just. It's why I Bitcoin. It truly is. Nevertheless, we have to work within the confines that we have, right? We have to be able to maneuver in manipulated markets. Who's following what's going on over on the metals forums, right? I would like to know more information about that. I took my metal position over a decade ago. I took it as insurance at the time. Since then, it actually hasn't done anything, including hold its purchasing power. But I understand and I know that because you're looking at the most heavily manipulated asset class out there. I do believe there will be a time when it is repriced. Do I think that the run on the physical metals at the COMEX are going to be successful? I don't. I know that they're really good at changing the rules of the game whenever it needs to be. We saw that in nickel this over the last few months, right? When the exchanges got caught on the wrong side, they just basically rewound everyone's trades. I don't think that it's going to be successful, but what I think is going to be successful as Saudi Arabia, as Nigeria, as they're building gold refineries, that eventually, right, you're going to see energy priced first in gold. I mean, you could hear my hesitation. I think that has a potential possibility of occurring. I strongly do. But I think ultimately that's not really that efficient. And I think that it would be much more efficient to price energy in Bitcoin. If that ever were to happen, forget about it. Talk about volatility to the upside. You're going to see, be prepared, be striped in, make sure that you're on the right side. That's all he said. Yeah. And, what market's initial reaction, send out a big wick, boom, 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 came back up. Now, whether or not that's to suck people in, I don't know. Like, I don't think anyone here is trying to put on a trade. I can't tell you, going back 20 years ago, how many times I would trade live meetings. The amount of volatility or the amount of times I saw, this is nothing. This is not even moving fast right now, right? But if this was a live hike meeting, this type of nature coming and then going up, taking out the stops over here and then running it back down the other side, man, it takes a long time, because your initial feeling is that, well, I could make more money on small time frames and off of volatility, right? The more volatile it is, the more chance I can make money. It takes a while to understand that that's not smart, and it's the reason why anyone who's around 30, 40 years will tell you they don't ever trade high impact news events because they're smart money. They know the difference. I know that as a young, confident little buck, you think that, okay, this is where I want to be performing. This is what I could do. No, it's not. And by the way, regardless of what you think, it's much easier to make money off of the 8-hour time frame than it is off the 5-minute, the 15-minute. Now, some people big shout out soul with the dollar sign, right? Some people, let me try to find that. I love this. Fire and calmness at the same time. I just love some people for many different reasons will be trading off the 1 hour and or lower, especially if they're looking to leverage money, get funded, and have to trade with whatever type of criteria they need to do to get it done. But that right there, that's just a testament to people's skill level, people's dedication, and people's determination. So, Brooke, what's going on? I hope you're well on this Friday. George, I'm glad to see you. Great day. Good day. When Elon ran the price of Bitcoin, not Powell, man, yeah. Right now, I think that for sure, we are looking at, do you remember? I mean, you could talk about getting things right. You could talk about things getting wrong, for sure. But what I want to talk about specifically was that before months before, a year before the Bitcoin 2020 halving, we talked about the greatest threat to that Bitcoin bull run was the Federal Reserve and its policy. Sure enough, in my personal opinion, it was the central bank policy going from that easy policy and then moving towards that tapering. And tapering is the pivot. Just talking about tapering was the pivot just as much as that the pivot went on this side now is when they move to a pause. It's not when they drop down the rates to zero and restart QE. No, the pivot, a pivot is a change of direction. The pivot's the pause, right? On the way up of easing, the pivot is the move to tapering. It's not once they finish the taper and start QT. So timing of the cycle is very important. Most people, most macro experts get that wrong. And you want to make sure that you understand it very, very, very well. We're just right on time. Should we rewatch The Big Short tonight? Well, I've watched that one so many times. I think the more I watch The Big Short, the more it becomes one of my all-time favorites. Absolutely love that movie. Oof, I do. So market reaction today, right now, so far, first of all, it seems both sides drawing people in on the upside, taking them out on the downside. I mean, anyone that has a read, you're a, I want to say genius. You're like a genie. I don't even know. Market's really not doing too much, kind of back where they were not too long ago, right? And we take a look at this first. I just want to check what this looks like over here. And again, not much is happening, right? Isn't it funny to be in an open winning position and being so detached that you're not actually rooting for it to continue? Like you just don't, it doesn't matter. Any individual trade doesn't matter. That is conquering the markets all day long. Thoughts if that was more hawkish than neutral. I mean, Rashid, I think it's, does the market buy it? Does the market believe that the Fed is going to continue tightening? So what I think is going to happen, it hasn't changed any of my beliefs. The only thing that can change my own personal belief, and I'll share what that is right now, and it's very clear, and that's coming off the recent, if you're still here on this Friday, go ahead and smash the like button if you hadn't had the chance. On your way out today, if you're on a mobile and didn't have the opportunity, could you take a minute here, share the love, help the Google algorithm understand what we're doing here? I'd appreciate that. But my own personal opinion and or thought, and it is data dependent, right? If all of a sudden, why I'm expecting the CPI to come in over here at under 8.5%, if it comes in above, then my whole and the market is very quickly, by the way, that same day is going to go ahead and price in a much higher percentage of the Fed hiking in September over here on the 21st, the following week, hiking instead of 50 basis points is going to start hiking in 75 basis points. And the market will not be priced for that, I don't think. I mean, it's a couple of weeks away, and you will see a big sell-off ensuing. So it's a big print. But I don't think that's going to happen. I think from what I see that we're going to come in under 8.5%. And then I think that they're going to hike 50 basis points here in September. So is Powell then right that they feel like they need to continue their course of tightening? Yes. Did they make a soft pivot, you could call it? And a soft pivot is not moving to a pause, but lowering the degree of the rate hikes. Yes, they did. We priced that in since July, the market, right? Off the June low. So that's already priced in. So if that changes and they come in with a 75 basis point, market's not positioned appropriately. There's much more downside risk at that point. Now, from there, what happens? Jordan, the market's data dependent. What do you mean what happens? We have to watch the price of commodities. We have to watch the price of oil. How are we supposed to know what October's CPI is going to look like? The job market, I expect that's kind of be softening a little bit. That's what the headlines allude to. But we don't know what inflation's going to look like. So we have to, that's really a big unknown variable. And if that continues to gently come off, then I think that we see in November and potentially in December 25 basis point hikes. So is Powell right? Are they still continuing to hike because of yes, but at the same time, are they making that soft pivot? Because yes. So that's where I think we're at. I think that's as clear as it comes, and that's it. I think that's as clear as it comes, and I think that where we're at. So if they do a 75 basis point hike, the one outlier is that, and that like right now today, the market's pricing in a 50% chance, right, of a 75 basis point hike. So that's good that I'm feel that they're going to do a 50 basis point and that you do feel they're doing a 75 point. My one asterisk is that it's dependent on the CPI on the 13th. But if that comes in higher than last month's, I think they're doing a 75 basis point. I think the market's going to price that in these next few days. But assuming that it's lower, I think they do a 50 basis point. And so it's good we both have, one side of the 50%. If they do a 75 basis point percent hike without that CPI coming in higher, what I think has happened, I think that could be a potential policy mistake. I think that the markets could potentially rally very hard on that, assuming that when I say policy mistake, meaning that will be the last hike of the cycle. So how do you like them apples? That's as clear as I can be on what I think is happening. I don't have a crystal ball, but I got a little bit of experience. We'll see what will happen. What's the reaction now? Market's continuing weak over here, digesting what's happening. If we take a zoom out over here, does anyone know? I've looked at it once or twice before, how I could get real-time data on the E-minis here on TradingView. If anyone knows, please let me know or point me to the resource that I need to go look. I thought you only needed a premium account. That's not the case. I have the premium account. It's not, I don't know how to do it. I would like to be able to have that real-time data over there. So, because I wanted to kind of set up what was coming off over here on the downside of what we need to look at. And I could probably do, nothing's changed from our own analysis over here, right? That was if Powell comes in, hawkish, and if we break down. Now, whether or not you're looking at this green line of support, which I think that in order for a continuation downwards, you could see you have a level over here. So you have the top level going back over here, and that's where we just came into. But below that, you also, that's showing not a trend line. Let me just do this quick then. All right. And then below that over here, you also have a very important level, resistance support, right? And that's where we're going between resistance support, blah, blah. And, so in this area over here, come on Monday, Tuesday, a breakdown of this confluence, should that be raised up a little bit? I think so. That's a hard one. You got like a box between that. Let's get it right. Let's do it right here, right now, so that we're prepared for next week. If anyone knows how I can get the real-time data, please let me know, right? So we got like a box between that area, just like that, right? So below that area, that's when I think that you could get aggressive looking to sell. I still think that we're in no man's land right now, right? And break below this line over here. And then there's a good chance we're coming down to test this area over here, this area of confluence of support. And still, once you break below here, that would be like, all right, now much more of a bearish bias, but breaking below here, then it gets, messy, or there's momentum to really, let's say, get behind. And that's coming off of, right, the way that we looked at, this is right before I went away on mission trip. This was down over here. We watched the breakout, and then the last video I remember, it's on the public side, showing price, the resistance above ahead, price consolidating before, and then you had the breakout over here. So that's where it's position long. I think it's smart money. Anyone who shorted that over there, I've talked about that. But because of the technical breakout like this, right? The breakout retest resumption. That's not something that I was lining up or looking for. Thank you, Batman, for hitting that. Cassidy, thank you so much. Everyone's smashing it, you know. September's considered, or historically, seasonality is not a good month for the equity markets, right? We will see. Everyone's prepared for that, but we could just look at something everyone's going to be very familiar with, fresh on their minds, that they know that, well, November, December, historically fantastic months in crypto, and because of the macro overwhelmingly taking precedent, it's not what happened. We're in a similar situation right now, right over here. All right, everyone. That's it for this Friday session. Let me jump back over and just see if that is continuing down over here, coming back down to test the Powell speech low right over here. Bitcoin and Ethereum not really doing anything yet. We all are very aware that these things could gain momentum very quickly, right? You could easily be looking at these things bleeding red later today. And that's it. All right, everyone. Boom, boom, boom. Yeah, Johnny. I mean, that's not the type of atmosphere that we have in here. It seems a little bit off coming in here with that type of attitude. I don't know, brother. Keep it real. That's not real. That's a facade. We don't like that stuff in here. Keep it real. We want to show you love. We want to be blessed by your presence, you know? So try to spread love, try to be the light, you know? There you go, Johnny. All right. You know, anyway. Can you imagine walking into a room, being that guy, just walking into a room, everyone's hanging out, having a good time, you know, trying to better themselves, learning, having good conversation. Some guy walks in there and he's like, everyone sucks. Man, come on. Why would you want to be that guy? Like, what happened to you in your life? I don't know. God bless you. I wish you the best, but that's not just, you know, it's not a good fit. You know, discernment works on both sides. If you like the channel, go ahead and subscribe. Show up every day, Monday through Friday. We'll be here live. We'll be putting the work in, and we will be assessing the markets, looking to better ourselves. You could decide if that's what you want to do, if you want to do it. Discernment works on both sides. That's not a good fit. Peace. See you later. Everyone, have a wonderful day. Have a wonderful weekend. Have a wonderful weekend. I look forward to seeing you all on Monday. All right, everyone. God bless you. Thanks for the love. US day. Oh, let's take it out. Let's check out Forex's reaction. All right. US dollar, Japanese yen. So see, I'm on NASDAQ over here, and I have a gazillion open tabs. I'm not ready for it. I have my US dollar and euro charts really worked up, but I could just go ahead when you talk about getting ready to pop. It's going to be over there, right above 137.70, call it, and maybe even as high as 138. And then there's not much over there. Me too. Grateful for you, my brother. Everyone, have a beautiful, beautiful day. Thanks for being here. Thanks for the support. You know, something as simple as smashing the like, but most of all for all your contributions in as far as the chat as we get going over here. I'll talk to you all later. Take care, everyone.